Hey, everybody. Thank you so much for coming. This should be really fun. We're talking today about the future of finance, as many people up here often do, particularly around how NFTs are going to change that and influence the future of finance. We're going to leave a little bit of time for Q&A at the end, so hold any questions and get ready to ask them at the end. My name is Pat White. I'm the CEO of Bitwave. We do accounting and tax software for companies that use crypto. Alun, why don't you introduce yourself?
Thanks very much. Thanks very much, Pat. My name is Alun Evans. I'm the CEO and co-founder of Freeverse. We're a layer 2 and platform for dynamic NFTs, so we call them living assets. So NFTs that can evolve and change based on how they are used, essentially.
Hi, and I'm Lisa. I'm the founder and CEO of Economics Design, and as the name suggests, we design economic systems for all Web3 ecosystems.
And I'm Andra. I'm head of BD and strategy at Origin Protocol. We focus on NFTs and DeFi. In NFTs, we create code-free storefronts for your NFT drops. And within DeFi, we have two products, a yield-bearing stablecoin called OUSD, and we're now building a yield aggregator in the staked ETH ecosystem.
Amazing. Lisa, I'm going to start with you because the history of a lot of this does come back to tokenomics. Like, it starts with Satoshi's white paper began what we think of as tokenomics, and that now has led to entire ecosystems. Give us a little bit of insight into the history of tokenomics up to this point, and then maybe start giving us a little bit of a hint as to what's coming down the pike.
Very good beginning. So I think when we talk about changing business practices and changing finance, it's about how the system has changed in a micro perspective, and how do we need to adapt our behaviors and practices with that. So when we look at economics, we look at tokenomics, where people think about, or token economics that I prefer, the term. It's all about creating an ecosystem where the token exists in there. And to design these systems, I created a framework and wrote an entire book about that in 3 key pillars. We go from macro to micro. The first one is market design, understanding what is in your market structure, your economic participants, your economic agents, as well as the behaviors you want to incentivize and disincentivize. Then the second one is your mechanism design. Understanding when people come into the system, when people are trading, when your economic agents are interacting with each other, what are the rules that they need to abide by when transacting and trading with each other? And the third one is where tokens come in. I've not even talked about tokens yet. And when everyone is transacting and trading, they're trading something of value. That's why they're transacting and exchanging. And this is a value. Otherwise, they don't transact, they don't trade. And anything that is a representation of value is a token. A token just represents value. Whether they're tradable, non-tradable, fungible, non-fungible, it's all about that token. It's all about that value. And token design is where we look at the different rules that the token needs to abide by. So when you think about token economics, when you think about business practices, business models, monetization in Web3, it's not just what is the token and the token goes up only. But understanding who are the market agents, who are the participants, what is the market structure, how do they interact with each other, and what are the rules they all need to engage with.
It's a really good point. So, Alun, take us, let's take what Lisa was saying in terms of thinking about overall ecosystems around tokens, and let's start to apply that to something like NFTs, and we're talking about dynamic NFTs. So when you're thinking about games, we are going to be talking a lot about games this panel because it is one of the leading edge financial ecosystems using kind of tokens. How does the incentive structure around dynamic NFTs actually start to come into play? I mean, it's a really, go ahead.
Yeah, well, it's fascinating because if you look at the way that NFTs and Web3 has been used so far, mostly in games, it has been in that play to earn, may I say it, Ponzi scheme, that's dominated, right? And I think now it's been really interesting coming here this year at NFT.NYC. Nobody's talking about that, right? Everyone's talking about how can we create a stable economy where the value is, as Lisa was saying, where the value is actually inherent in the token itself. And in this particular field, obviously, Freeverse, we're interested in dynamic NFTs is what we do. We believe very strongly that the value of that token, or one aspect of the value of that token, should be, or can be, if you like, associated with how the token is used, right? So if the token is changed based on what the user has done with it, so then they are affecting its value. It's like in the real world, if I have an iPhone, right, and I want to sell you my iPhone, if I drop that iPhone on the floor and the screen cracks, right, then the value is less, right? Maybe if I keep it really polished, or if I have a car or something and I upgrade the car, I put new wheels on, I put new interior or whatever, then maybe the value of the car will go up, right? I don't know. So I think in the same way, you can have tokens that can go down in value, and in the game world, that could be think of a sports player getting more fit the less they train, right? Or it could be they could go up in value based on the fact that if you're going back into that game and training that player, right, that asset, then the value, the inherent value to somebody else is more, right? So by introducing that dynamic aspect to the whole concept of NFTs, I think it's one way of controlling the value, but as Lisa mentioned, there are other ways as well, right? And there are other more standard financial ways of controlling it too.
Yeah, we're gonna definitely come back to dynamic NFTs because honestly, it's probably the single most important part of this discussion today. If we're thinking about the intersection of NFTs and financial systems, dynamic NFTs are where that's going to start happening. Like it really is an important part of it. Andra, give us a little bit of an insight. So, given what we've been talking about so far, which is incentive structures and design of systems, how does Origin start to think about that?
Yeah, so we're at a basic level or foundational level. It's where you distribute these NFTs. So you create the tokenomics around it, you decide whether they're dynamic or not, and then you decide what does the experience look like. And Origin allows brands, creators as well, to bring a unique experience when they offer this to their community. In a sense, when you sell a product, right, you have the option of selling it on Amazon maybe, or you could create your own Shopify. So it really could be seen that Origin is like a Shopify for NFTs, where you can create your beautiful storefront, you get your own like logos, you invite your users to come there, and you just have a more like a beautiful experience that's in line with your brand. So that's where we come in. It doesn't matter what those NFTs look like, we accept all of them, right? Yeah, because I think that even for games, for example, I've been advising a company called Braun Studios. They've been doing blockbusters in the film industry for quite a while, and they're now launching in the game space. And they wouldn't want to launch their NFTs for their games on OpenSea, for example, because they want to control their brand experience. They want to have something different, right, where they stand out. So this is what Origin enables one to do. We also offer some customizations for those brands that just want something on top of what just the marketplaces that we create, and we work one-on-one to understand like what is the expectation and how do they expect to engage with their community and so on and so forth.
Yeah, really, really interesting. Okay, so we've started to talk about like where we are today in terms of what are the services we're offering, what are the technologies we're using, what is tokenomics, which is an important one. Let's start looking a little bit more forward here, which is how is the world going to change in the next like 5 years? So Lisa, I'm going to start with you on this one. We're going to go back to you. One place I want to start on is geopolitics, because we talked about this before a little bit and how that's influenced it. So, political climate in the US, political climate in Hong Kong, Singapore, Europe, how is that actually both going to lead to, how is that going to change how we are financially building out these Web3 ecosystems?
Yeah, it's a very tough topic. So I'm based in Singapore, and I'm from Singapore. And Singapore used to be very open with crypto regulations, I would say. And now Singapore is getting a bit more, well, in the last 12 months, a lot of bad mistakes happened, and Singapore was quite involved in that. So Singapore is now very cautious about it. That being said, Hong Kong is rising again. Japan is rising again, and everyone is really interested to figure out how do you regulate this space, because you've got all the consumers there interested to go and play and figure out, I've got assets, how do I spend them? And because there's such competition within the East Asia, Southeast Asia market, that's going to be very interesting in figuring out who comes up top. And you also have Dubai and UAE coming, Dubai and Saudi, all these, the Gulf region is also coming up. They're attracting a lot of talents there. And they do have some ideas of what regulation looks like, which is very fascinating. And you have the Americas and also in Europe, everyone is trying to explore these things. And I was speaking with the Fed. The Fed is actually, they know what's going on. They're very interested in learning more about this. The Fed is different from the SEC. The Fed is quite exploring what this looks like. And I would say that the common denominator in all of these jurisdictions, whether what kind of geopolitics they have in place, is understanding how do we look at risk of this system. And at the end of the day, that is what regulators do. And you can regulate risk in terms of stopping everything, which is what Singapore is doing now, which is what the US is doing a lot of. Or you can regulate risk in terms of understanding what kind of risks are unknown, how can I put regulation in place so that these invisible risks are now visible. And that's the whole thing about blockchain, right? A lot of data used to be invisible, used to be opaque in different kind of databases, and now we get it's transparent, it's verifiable. So how can we leverage this, which is the core thesis of Bitcoin anyway? How can we leverage this? How can regulators come in and understand risks? We talked a little bit about it just now, which is a quick one, where there's three kinds of risks. We have financial risks, which we can talk a lot about. There's the technical risk, which is where smart contract audit comes in. And then with economic risks, because again, we go back to us talking about rebuilding this entire ecosystem, rebuilding the rules of how people trade and interact. And that comes with a lot of risks in place. How do we analyze them, evaluate them, how do we look at them, and how do we regulate them?
Yeah. To stay on you for just 1 second, because it is an interesting topic. When you look at something like Hong Kong and how they're doing, how does that overlay with Chinese policy in general? I mean, it's a really hard question.
Yes, that's a very good point, and I love geopolitics as my hobby, so I talk a lot about this with my friends.
Yeah.
So the thing about, politics, whatever, China, Hong Kong, usually they see it's the same country, for example. And Hong Kong is always seen as like the little test ground. And so when it comes to Chinese politics, usually, when they say something, it gets implemented the next day. You don't have any time to react. But this time it's very different. They announce it so much in advance, and Hong Kong consumers are allowed to go and spend and hold digital assets. And there's a huge movement of consumer and retail people coming in. And this is a big testing ground, a big sandbox. And I've never seen anything like that before. So this is really, really exciting.
Yeah,
and it increases competition efforts in the region, and I think the next bull market is it's going to be very fascinating.
It's so interesting to see, go ahead.
Yeah, sorry, I just wanted to kind of bring the conversation a bit back to finance, NFTs, and the US, actually. So I was just in Washington for another panel a couple of weeks ago, and we were talking about exactly that. Like, what is the issue with the US regulators, or what is the US regulators' issue with crypto, right? But crypto is a big space. You have DeFi, which is the ecosystem where I hang out in, and then there's NFTs. And this is where it gets dangerous when NFTs enter finance more aggressively. Because the underlying, in Washington, the way I understand it, and this was coming from a prosecutor and policymaker now who works to advance crypto in the US, is really national security. That's what the US cares about deeply, right? They are concerned with losing their status as superpower of the world, and DeFi kind of threatens that, just because you're creating these alternative economies that have no geographical boundaries, and of course we also have no KYC, so that poses another problem. But really that's where the government is coming from. And there's other factors at play as well. So you have the traditional financial ecosystem that is established, has been around for a very long time, and they also don't want to be threatened by something like DeFi, because of course they're the incumbents who wants to lose all of their profits. So there's that. And then there's the tech sector, which is kind of where we are. We're the builders, right? And we come in with we just want innovation. We want to create cool stuff. We want efficiency. We want to democratize crypto. We want all of these things with NFTs, with DeFi, with anything else. So we have all these interests clashing, and we really don't speak the same language, and that's where all these interests are misaligned, right? So I think what the US is successfully doing is pushing innovation out of the US, and we're going to places like Asia, like Dubai. Even the UK has friendlier regulation than the US, Latin America, and so on and so forth. And by doing so, I think that the US is making a huge mistake, because instead of understanding it, they're just pushing it away. But eventually, when they realize what they've done, it will circle back, and that's when they'll become. That's my opinion,
that's the
at least.
hope. I mean, that's always the hard part about this is when you have a rent-seeking industry like the financial services industry that sits in that middleman position and captures so much value from being in that middleman position. It's very hard to say, hey, no, let's just seed that and let a bunch of smart contracts do all that hard work.
Peer to peer.
Yeah. Oh, it's a really tough problem. And I mean, even for us, I can't tell you the number of customers we've had that have actually closed up their U.S. shops and moved to Portugal, literally picked up, they fired everybody in the U.S., picked up their 3 or 4 co-founders, moved them all to Portugal. Now they're a Portuguese company, and they don't fall into the same CFTC stuff.
And as a builder, you're afraid to be in this country anymore, because you don't know when they're going to come after you, right? So looking at Sushi Swap and what's happening with the SEC, it's should I even be in America? Is my freedom at risk here, or should I just get out of here, right?
No, it's a huge issue. I mean, I don't know. We all talk about it all the time. It's that weather kind of thing. We all talk about the weather, but it's a terrible position to put the U.S. in. Okay, so let's bring it back to tech here for a second. So, Alun, let's talk about dynamic NFTs and how that actually looks over the next few years in relation to financial products. We talked about for games. What's it look like for financial products?
Yeah, that's a really great question. How do NFTs fit in generally into financial products, right? That's because obviously it's a token. Obviously you can hold it, you can own it, and then you can stake it, and you can do whatever you want with it, and so on and so forth. But if that asset can change, how does that affect the value of it? And we were talking earlier on about can you have assets that are linked to real world, and can you have real estate, right, where you have a token that represents real estate, and then as you change the kitchen, you change the token of it. You know what I mean? I think there's talking about the where the value of the NFT is, whether it's in DeFi, or whether it's in gaming, or whether it's in art, or whatever it is. I think one thing, coming back to the regulation side of it as well, is also is where is the data of that NFT, right? And oftentimes, I've used the American oftentimes, spending too long in America. Frequently, I should say, right? The token information is stored on some private server, right? And so what happens if someone forgets to pay their AWS bill?
Or the government seizes your...
Or
FTX's
the
URL
government
gets
seizes
seized.
it, right? And suddenly the token information disappears. And I think you can kind of get away with that if it's a $10 game asset, right? So what, right? But if it's a financial asset that might be worth a considerable amount of money, then the security around and the risk associated where that data is really, really high. So you have to make sure it's decentralized. You have to make sure it's an IPFS. You have to make sure that it's certified on chain. And I think a lot of companies in the entertainment sector, I think they're taking the shortcuts, right? They're thinking, users don't care, right? And what's interesting, I think, if the users don't care, then the US government does care, right? so I think in the financial world, I think it's even more serious.
You mind if I'm gonna keep talking to you, because you mind if I ask, one of the use cases that I love for NFT gaming is the idea of, I play a Star Wars game, I get a lightsaber, and then I take over my Harry Potter game and I get to use it there, and this interoperability between games and this like layer that abstracts it all. One of the big barriers to be able to do that is the idea of actually the assets themselves. So we were at GDC last week, I think 3 of us were talking about this, and you still have this issue of how you actually get the 3D assets themselves and move it around. Do you see anyone doing anything really cool in that space? Like, is there interesting stuff happening to actually create interoperability?
So yesterday downstairs on the games stage, there was a whole bunch of talks talking about interoperability, right? And everyone agrees. I think everyone agrees. It's kind of cool, right? It makes a lot of sense, right? I buy a Ferrari in one game. Why can't I go and use it in another game, right? It just makes a lot of sense. However, there's 2 barriers, the 2 elephants in the room. One is, as you mentioned, is the practicality of it, right? It's like, I have some 3D assets. The art pipelines for different games are radically different, right? The art pipeline for one driving game is completely different to the one to another game, right? That's one problem. There's 3 problems, actually. The second is like a design problem. What happens if you buy a car in a game and it's the best possible car in the game, but it happens to be the worst possible car in another game, right? And there's the major elephant in the room, which is just the rights, right? Because like, you can buy a car, but like, it was not going to appear in any other game, no matter how, if it's a standardized art, if it's a standardized design, whatever. It's never going to appear in a competitor's game unless those 2 companies come to an agreement to permit those NFTs to be used in other games. So I think, the interoperability thing is a dream. It's a nice dream. I think everyone wants it. It's a nice idea. But I still see it a long way off, if I'm being honest with you.
I do have one more other risk, the 4th risk, which is the economic risk. And that is when you look at getting an asset from a Star Wars game to, say, another game, that is an import, like a foreign import of goods. So if you go back to GDP, everything that we have in games today, or any economy, is kind of autarky state, because they trade within the ecosystem. To export to another game, it opens up the economy, which brings a lot of different risks in place, which looks at FX risk, which looks at foreign import, and how does the value creation change in terms of business practices, in terms of financing, in terms of accounting for all these different things. It changes everything dramatically.
Maybe the importing game could charge an import tax. Their own customs.
100%.
If you start thinking of these as worlds that you're building, then you actually will have excise taxes, import taxes, all these
Fascinating.
Yeah, and that changes a lot of stuff, right? It changes the fundamental of how you design the economy in the first place. And that's where things keep changing, and that's fantastic. I love that. That's where dynamic NFTs can come in.
Yeah.
But we're not there yet.
Lisa, do you have anything to add about dynamic NFTs for financial products? So thinking about bonds or other sort of structured instruments that...
Yeah, that's a very good point, because when we talk a lot about NFTs, especially, I've been here, this is the 3rd year here, everyone's always talking a lot about art and NFTs.
Yeah.
But there is a huge potential in terms of creating structured products, in terms of creating securities with NFTs. And the thing is, securities is not a bad word.
No, it's just, we always treat it as
we all
bad
shiver.
words.
Yeah, it can be. It's actually okay. It just follows a lot of regulation.
Yeah.
But if you can create, Andre just now was talking about NFT capsule, where you can throw a lot of different things in there. You create a structured product, and that can be fractionalized and everyone gets to hold them, or you can create different kind of yield-bearing products, which is going to be very interesting, because hedge funds managers or a lot of finance people, they're very good at specific things, and if we get to decentralize this, everyone brings in their domain expertise and start creating different kind of interesting ideas and structured products, that will be very powerful.
Yeah, Andra, that's a great point. So tell us, because we were talking about that before, there's this idea of composability around NFTs, DeFi products. Give us a little bit of insight of how you guys think about that.
Yeah, so I think we have successfully kept these two sides of our business separate up until now. So on the NFT side, we've done more of like the arts or in culture focus. Like I said, we've collaborated a lot with musicians. Well, we put NFTs into space with SpaceX, so that was pretty cool. And on the DeFi side, we focused on just like pure DeFi, and we're really exploring now how can we bring these two together. And just going back to the same conversation around like could we create some sort of like portfolio, let's call it that, where you have, so we have a yield-bearing stablecoin, right, that allows you to buy NFTs, buy these yield-bearing stablecoins, buy this staked ETH, it's called OETH, again, where you earn yield passively from the derivatives market, and then you maybe put them all together and you sell them as a portfolio on whatever market. There's always a buyer on the other side, right? So that's something that's down the line, and we were constantly looking to innovate, but now we're just building the individual pieces that could then come together in a portfolio.
It's really cool. So I mean, the idea of composability here, because the DeFi already was built on this idea of composability. So taking that to NFTs and bundling it up into composable actual structures that then you can bundle up again. Really cool stuff. Well, we're just about at the top of the time. So Andra, how can people find out more about your company? How can they find you? All that stuff.
Yeah, we're super big on Twitter. We have a community of 200,000 followers. So you can find us at originprotocol.com. That will direct you to each of our sites for Story, the NFT product, for OUSD and OETH, the two DeFi products that we have. And I do hang out on Twitter quite a lot. So yeah, find me there.
Amazing. Alun, how do people find out more about Freeverse?
Yeah, you can go to our website, freeverse.io, and feel free to get in touch with us there. We have some interesting white papers on player-driven economies and things like that in games and how brands can use that. And I'm most active on LinkedIn. I'm a LinkedIn-aholic, so
I'm a
you can find me
LinkedIn guy
there.
too. It was B2B stuff. So Lisa, how do we find out more?
Yeah, so you can go to economicsdesign.com. I've written a book about this. I have created a lot of different courses. I've taught in different universities, and we create a lot of different white papers, reports about how to start thinking about economics, because this is the core fundamental of the Web3 space.
Yeah, wonderful. Well, thank you all. My name is Pat. Again, you can find out more about Bitwave at bitwave.io if you're looking for an accounting product or tax product for your crypto assets. And then I'm at Pat White on Twitter, although I'm not active on Twitter. I don't know. Twitter's okay. It's kind of weird right now. I don't know. It's a weird space right now. Thank you guys so much. This has been really, really fun. Thank you, panelists.
Thanks
Thank
very
you.
much. Thank you.